Day traders, Stacey Burke from Stacey Burke Trading. Happy holidays to those who are already on holidays. Again, thank you for everybody's patience the last couple of days with the problems with Thinkific. Very appreciative of, I know it can be frustrating, but I'm very grateful for that, and I appreciate all the feedback. So any issues or any feedback that traders have, please feel free to email me. As I've mentioned, I'll be adding to the resource library that's been put into the course panel. And any issues, any questions, please email me, and hopefully you're getting a lot of value out of that. Today we're going to be talking about trading around major holidays. A lot of people have emailed me and asked me about, do I trade during the holidays? And I do trade pretty much right up till the end of the week. I don't, get too worked up about it. I'm well aware that obviously the volume can thin out a bit, but generally speaking, if you go back and look at all the Christmas holidays, the New Year's breaks, there tends to always be normal market movement. Obviously on the major holidays themselves, the markets are closed. But if you go back and back test, I've mentioned this before, whenever there's a major US holiday in particular, a 4-day weekend, we will often see the markets on those days go into a very narrow range or an inside day. And obviously not every single currency is going to reflect that. But a lot of the commodities will, because the American markets are the main session for some of those to trade. Obviously indexes as well. Christmas, New Year's, actually I'll change that. It's not New Year's, it's New Year's, July 4th, Thanksgiving, Labor Day, etc. So any major 4-day break or even a 3-day weekend can be a great opportunity. We will often see a large move come out of that narrow range. It doesn't have to be the next day, but we can see a consolidation, a 3-day setup. We can see an inside bar false break reversal, or we can see maybe the beginning of a trend trade, first green day, first red day. But it is a powerful signal. And as I mentioned in the playbook, certain signal days are very powerful. First red day, first green day, day 3 breakouts. They can be the beginning of large moves. So stepping back and again, focusing on the larger picture, the larger consolidations that build up, the order flow that builds up over 2, 3, 5 days. So a lot of times around the major holidays or leading into the major holidays, we'll see a very consolidated market, which we've seen on a few instruments. Saw some explosive moves on gold today. But understanding that those 3-day setups can come out of those consolidations after the break, especially right into the new year or right into Christmas for an explosion between Christmas and New Year's. But there are some fantastic opportunities that have come out of July 4th weekends, Thanksgiving weekend days. The market goes quite quiet. Traders are off. They're on holidays this week. I'm sure a lot of traders are already on holidays, especially if they trade for institutions or hedge funds, or they might be trading right up to the end of the week and then they're gone. So we see a lot of activity that could potentially be based on lower volume. But essentially, I look at the market. It's I'm not trying to trade these little choppy little things in between, so it doesn't matter. I'm still looking for those setups, 2-3 day setups, inside bar trade setups, the signals, the false breaks on a day 3, or those are the scenarios where you have the opportunity to potentially participate in a market that's about to capitulate. So you can go back and look at your instruments and just have a look around Christmas time. Not to say you have to trade, but people have asked me, I know a lot of traders say they don't trade from, November on. If you're looking to trade, my style is that I'm looking for these certain setups and they continuously show up, which makes me believe that there's no reason to stop trading. And when I don't want to trade or when I'm on break, obviously Christmas Day, Boxing Day, there's a 3-4 day patch where the likelihood of having a real quality setup diminishes. But in just a normal Monday to Friday week leading up to Christmas, there's no reason why we can't see large moves. So we have an example here. Same time back in 21, we have a Monday, Tuesday. We had Tuesday inside bar. First green day on the Tuesday. We have volume trap below Friday's low for a parabolic day 3. First green day trade, a rising wedge, a compressed wedge for a parabolic move. previous Christmas to that, 2020, I believe that's 2020, and we see an inside day Monday, Tuesday again. Monday, a down day, a dump day, Tuesday, first green day, and then a trend day on day 3, December 30th. So we have the 3 days after Christmas, and we have a nice 3-day setup for a beautiful trend trade. We go back another year, we see an inside day on the Tuesday again. We had a false break and a death line trade. The false break, the death line trade, first red day, then an inside day, and we get the false break inside day reversal trade. Again, right after the new year. This is January 4th. We have December 31st. We have a new year. So this is not only the high of the month, it's the high of the week, the high of the year. Now, we haven't talked much about that, but we'll do a short video on that as well. The new year. So we have a new timing cycle, a new month, a new opening range, and a new initial balance for the year. We could look at a previous Christmas again. December 24th. We have a Monday, Tuesday, an inside bar on the Tuesday, first green day, a narrow range day that followed the first green day, and then the parabolic trend trade 2 days after first green day, which is something I talked about previous, is that the second day after a first green day, if we don't see that move, we can see the parabolic explosive move, which goes back to the previous Friday's high. So again, a 3-day setup, but dump, inside day is our signal day. That's a clue, first green day. And then the failed follow through. So no first green day trade. We have first green day trade opportunity possibly in the London session, but no low of the day opportunity inside during the Wednesday. But we get a parabolic trend trade on the Thursday. And essentially, by all intensive purposes, this is what I call the pseudo inside day, where it's actually inside, both days are inside of Monday's range. And that forms a consolidation again, a nice rectangle, a high and low rectangle with consolidation inside for an explosive parabolic trend trade. Narrow range day on December 30th on the pound again. This is just going through, you can go through the currencies. We'll go through gold and oil as well. Narrow range day on December 30th, not an inside bar, but a narrow range day. And then the explosive continuation trade on December 31st. So New Year's Eve day. And then on the new day on January 2nd, we have the inside bar and then the collapse the following day. So we have the parabolic explosion, the parabolic trend trade heading into the New Year's end, coming out of that narrow range day. The pump, the narrow range, and the continuation. That's the measured move from a narrow range day. And you'll also notice on this type of day, it's a double distribution day. So you can read more about that in Dalton and Market Profile. But we have the split peak formation high, peak formation low for a higher high, and then it forms the higher low. They've split it on the previous day's high. So it's a double distribution day that trades sideways before continuing the trend. 2018, another example on the pound, we have an inside day on the Friday, the vertical move in the US session, that's the London session, for the false break, and an inside day the following day. So we have the false break trade the following day. We have a London inside day that explodes vertically out of the inside day. So we have the inside day, and this is the coiled up consolidation for the explosive move to the high of the day. So not every single trade is going to be, a reversal or a trend trade. We may just get a vertical explosive move that goes to the high of the week out of the inside day. It's an inside day is a signal day. July 4th is a great example. Again, I'll just show some of these narrow range days and how we can get some large moves that come out of these consolidated days. So I look for those around major holidays. It's a 3-day setup. We have a Wednesday, Thursday, Friday. July 4th is the narrow range day. A broken down market, and then the low-hanging fruit vertical blow-off in the U.S. session. U.S. CAD, December 21st, 2021. We have the inside day. It's also a first red day on a Tuesday. And then we get the capitulation in the New York session, the U.S. session, on day 3. So we have the inside day right before Christmas. We have the first red day, and then we get the breakdown at the previous day's low, the pop-up for the vertical explosive first red day trade on the 22nd. Again, inside bar. December 28th, 2021, after Christmas. So you can see we had a high of day, low of day just after Christmas on the Monday. But then the market gives another inside day and we get our little false marginal new high for the short trade on the 29th. Not every trade's going to go vertical like that. But again, the inside bar is an indication of a potential false break or a trend trade opportunity. And sometimes you'll get a marginal touch similar to this it's after a vertical move, but for all intensive purposes, it's still technically an inside day because it doesn't break out enough to trigger breakout traders. So we get the inside day, that's a signal day. And the rest of this new day, we're looking for the opportunity of where the market gives us the short trade from the previous day's high. Another example, July 4th, Canadian dollar. We had a Monday, a higher high on the Friday, the false break Friday high. So that starts our day one count, the false break. Day one, coming down, we trigger breakout traders at Friday's low, and then we get the creeping trend down into the low of the week into the London session for the explosive parabolic short squeeze. Canadians don't celebrate July 4th, so there may have been some activity on the Canadian dollar that day, but probably much less. It's a day one, it's a Monday, but the day after July 4th, we get the parabolic short squeeze. Inside day, December 19th, 2022. We have an inside day on the Monday just before Christmas. And again, the false break of the inside bar high before the Europe-London sell-off to the low of the day. They trigger breakouts, they hit stops. They trigger the breakout trader of the inside day at the high of the week, of the new week. Doesn't quite take out Friday's high. We already have volume trapped on a false break from Friday, and then the vertical collapse. So if traders have gone long on the breakout, other time frame traders, daily, weekly, 4 hour, hourly, whatever that may be, they most likely have their stops at the low of the day. Inside bar a week before Christmas. Another example on the Swiss franc, December 29th, 2021. The Monday just after Christmas. So we have the 24th before our new week starts on the 27th. Monday's an inside day. We get a marginal false break on Tuesday, day two. That forms our initial balance. And this is the rectangle on our day one, day two. We get 3 levels of rise. They trigger the breakouts at the high of Tuesday. Just tap the inside bar of Monday's high, and we get the vertical explosive collapse heading into the U.S. session from the gap time at the London Open. December 29th, a few days after Christmas, just before New Year's. An example on gold, right after Christmas, we have a Monday, day one breakouts, day two breakouts, day three breakouts, Monday, Tuesday, Wednesday, day one, day two, day three, false break, a Europe collapse, and then the low-hanging fruit vertical parabolic short trade in the U.S. session. So again, the stair step up and the elevator down right after Christmas, just before New Year's. And then we have the gradual climb, day one, day two, day three. Now the lead up into that 3-day setup started with an inside day on the 27th, right after Christmas Day. Another example of July 4th, a narrow range day after our first red day on gold, and then a nice vertical explosive parabolic short trade the following day. So just again honing in on signal days and when we get these major holidays, how these can be potentially a nice signal day. We false break, it breaks down, consolidates inside of the peak formation. That's the consolidation without taking out the low for an explosive move. Whenever you get a market coiling sideways without taking out the high or the low after the false break, that is a giveaway sign of a potentially building explosive move. Another one, 2021, July 4th, a narrow range day on a Monday, and then the parabolic trend trade follow through on day two in the Asian session. So coming out of a peak formation false break on the Thursday, a reversal day on day two, the Friday, the flip the book day, come back inside, the narrow range day on the holiday, and the explosive trend trade continuation. So looking at these narrow range days and then looking at the bigger template for the explosive follow through day. Another example right at Christmas time of a market where they pump it up just a couple of days before Christmas on the 22nd. Narrow range day that continues with the breakout, day 2 breakout, then a day 3 breakout without reversing. Inside we have the higher high, higher low. Narrow range day, the false break, first red day, and then in our day 29th, 2 days before New Year's, the vertical explosive reversal day. So volume trapped up high after our pump up day. So you'll notice the breakout of the previous day's high on the Thursday becomes a level of support, and that's our death line area. If you project that across, you've got 3 days of trapped volume after our first red day and the vertical collapse on the 29th. So again, normal market conditions, some opportunities for large moves. Gold again, January 3rd, right after the new year, the pump up, day 1, day 2, day 3 into our Friday. This is a Wednesday peak formation low. You'll notice again the false break reversal. They bring it back down into the low before the reversal. That's the day 2 where we can measure back 3 levels of drop for a potential strike zone if that's your session. And then when we see the reversal, this is the low hanging fruit continuation trend trade on day 2. We get a runaway market on day 3. Day 3 tends to blow off in the direction of the trend. A very subtle trigger on day 1 Monday at the high of the week, high of the month, high of the year. Okay, beginning of a new year, beginning of a new month, beginning of a new week, and a new day. For our M structure, it breaks down the lower low. We measure up from the lower low, heading into the next session for a strike zone reversal and a vertical blow off in the U.S. session. Pump and dump right after the new year. One more example on gold. Inside day, December 19th is the Monday. So the inside day is on the Friday. And this is just today. And we have a market that was a false break on Monday. High day in London. They broke down. There was a bit of a low-hanging fruit continuation right at the beginning of the U.S. window. They pumped it up 50 pips before reversing and collapsing down through higher level longs. Now you'll notice that the breakthrough of the low of the day becomes a false break level on day 2, or Tuesday. So we have Thursday, Friday form our low of the week. We have a narrow range consolidation. We have a rectangle down low. They break out of the rectangle. We get a false break reversal on day 1 and a false break reversal on day 2 for an explosive parabolic move. So this 3-day reversal setup starts with a false break and reverses on a false break. We have a large rectangle on day 1, day 2, our opening range and our initial balance. The reversal, this new high, this vertical new high becomes our V bottom dump and pump in the London window and the low-hanging fruit continuation trade in the U.S. session. It's upside down for long. It's still low-hanging fruit because that's the easy trade, trading in line with the trend back through the high of the day. So not sure what's going to happen. Anything is possible, but signal days around major holidays can give us some potential insight into 3-day setups, false break reversal session trades, high day, low day opportunities, maybe parabolic short squeeze or parabolic trend trades. So we've had, I think, ideal market conditions. If you're inside and being consolidated, be aware that heading into the holiday, we don't want to be trapped into anything that's poor quality. But when we get these opportunities coming out of that consolidation, those moves can be potentially explosive trades. So again, thanks for a ton of great feedback. Appreciate the input and feedback from traders. If there's questions or anything, please email me or comment. I'd be happy to answer any of that. Have a great day. Keep it simple. Stay on track. Heading into the end of the week, major holidays. So next year is going to be the best year ever. Have a great day, traders, and may the markets go with you.